Welcome to StockMarketPunding.com. We're going to be talking about the S&P 500 once again. We're going to be talking about the S&P 500 earnings. In 2008, the S&P 500 earnings, the 500 companies, which are these right here in the sector. Basically, what I want you to know is that there are 500 companies in the S&P. And what fund managers and people on Wall Street look at, well, during this great recovery, is that they're worth, $92 this year, forward looking 2011 and so forth and so on. No, they're retail. And that means that the earnings have done quite well for the last 6 quarters in the S&P, because what it means is that over here, the earnings on the S&P got down to about $55 a share from 120. And that's what made that long-term yearly short so good. Once they got down at the bottom and the earnings started doing better off of the 2009 lows, those combined earnings of the S&P 500, like I said, are retail at this point in the game, and I'm going to show you why. SMF Street, we told people in the second half of the year, when the beginning part of the year started, we said that we still had a lot of fuel in the earnings up until July, and that July would be the peak in the earnings. And I've done a complete video here on all of these economic indicators. There's 15 of them. We specialize in every one of them. After 30 years, we've learned everything. We have a mathematical system. Here's another video that you can watch. It'll explain to you. If GDP, if I'm correct, and GDP is at 1.5% and lower, and possibly even lower because of high taxes coming our way and a lot of other ruinings that are coming our way, these S&P earnings are not $92. There is a lot of room to come down here to get to where the gross domestic product, the GDP, the earnings would be. Granted that most corporations have gone outside of the USA to make money and sell their goods in other parts of the world. So I give them credit for that. What I don't give them credit for is that the retail value right now of the S&P 500 at $92 a share is retail, folks. And you let those retail fund managers and you let those goofballs buy those retail earnings. We have been short. We got every live trading video on our website. We have a lot of floor below the market here. And I did the monthly charts. I've done the weekly charts on it. Go find them on StockMarketPunding.com. SMF Street welcomes Main Street. And the reason why we're short the S&P, and we're going to be adding these shorts, is for lots of reasons that I talk about in other live trading videos as we were putting those live trades on and buying S&P index options and bear funds looking forward, because the combined 500 companies over here have peaked in the earnings trough in July of 2010. And we told people that in December of 2009 what the full forecast for 2010 would be. And we are 100% right. Way before any of it ever happened, way before any of the reversals, as they were all bullish, we had given that forecast that the second half of the year would be weak. Once again, we're a little bit excited about the video because we know what the reality is. We've been doing this a long time. We've got a mathematical platform that deciphers all 500 companies as to what those forward-looking earnings, so that means the October quarter, the January 2011 quarter, and the forward-looking quarters in 2011, they don't match up. And this is where the financial pundits will fool you. This is where everyone wants it to be that way, but it's not that way. You cannot have $92 earnings at 1.5% and lower GDP. It doesn't add up. Welcome to StockMarketPunding.com. This is the monthly S&P chart. I just want you to know that for our people worldwide and our traders worldwide, we have taken and we have developed these positions. We've called every market top here in the year, and we told people to go to cash up here on the S&P. And yes, the earnings were great, but you got to know where that retail price with the stimuluses that made those earnings go higher to $92 a share from wholesale value of 55 to 92. They were really retail at the big correction that when they were at $120 a share over here, they got down to $55. We had all the stimuluses in the world done by your federal government with your high deficits that got these earnings to the retail price. They were higher than $92 a share. They're coming down, but moving forward, they go lower. Once again, we do care about you. If you need help, you want to get involved, get with SMF. We have all the live videos, all the live analysis before it happens, why it's going to happen. And guess what? They're retail. We got a lot of room down below this market right here. Higher taxes will take the S&P earnings lower. That means that this here makes a lot of money going down. Bear funds, put options, you name it. Just like over here when all the bulls got taken down, there was a good value here. The value up here on these S&P 500 earnings going into the closing year, they're not $92 a share, folks.